The agenda is in two parts. The first part of today's session will cover updates on guidance on recent developments in response to the COVID pandemic, CJRS, the furlough scheme, a few points on recent Charity Commission guidance, as well as reporting matters and some of the changes to the gift aid relief rules. And then in the second part, as we continue with the extraordinary circumstances, we're all aware that we need to continue to do what our charities do. And we look here at changes to the way we're operating and some of the things to consider, looking at the matters referred to on the slide here. So I'm going to kick off with the CJRS, Coronavirus Job Retention Scheme, or furlough scheme. I think it's probably familiar to most people now. It's been with us in a number of different forms for almost 8 months, and the level of support offered has changed a lot over that time. So the current position, which has been confirmed from the start of November, originally it was meant to end at the end of October. We now know it's going to run on towards the end of March, and it'll be in its current form to the end of January, with the terms being reviewed at some point during January. So it'll broadly follow the rules from now till January as they stood in August. So employers can furlough their staff wholly or partly and pay them at least 80% of their usual pay for the hours that they do not work in any given pay period. And where they do so, the employer can claim back 80% of an employee's wages for these unworked hours from the government, which is up to a cap of £2,500 per employee per month. Although the employer is still required to pay national insurance and pensions, there's no reimbursement for those costs. And of course, they have to pay the employee for any hours that they actually do work. It's worth noting as well that there's now a reduced time frame for making the claims. Up until the end of October, you had a month to deal with the claim and get it submitted. So the October claim needed to be dealt with by the end of November. That has now been cut to 14 days. So the November claim needs to be made by the 14th of December. So a little bit of a little bit more pressure in terms of dealing with those claims. Another main difference is that staff who are can now be furloughed who have not previously been included on a claim. So the clock has been reset in a way on that. Previously, you had to have been employed by a date, I think it was either the 19th or 20th of March, and also on into the autumn to have been included on a previous claim. Now the scheme is open to any employees who were employed at the 30th of October 2020 and were included on an employer's payroll at that date, and also been notified to HMRC via an RTI submission on or before the 30th of October. So it's opened it up potentially to any new employees who've joined over the past 7 or 8 months. One other point is that anyone who was employed at the 23rd of September but has subsequently been made redundant can now be re-employed and furloughed. So, as I say, you're now able to furlough employees who were not previously eligible for the grant. Quick mention of the JSS, the Job Support Scheme. This was intended to replace the CJRS from the 1st of November. It was doing a similar thing, but in my view, a slightly more complicated manner. That scheme has now been postponed until the CJRS ends. I wouldn't mind guessing that it won't see the light of day again. So we'll wait and see. But as things stand, CJRS runs to the end of March, and then the job support scheme may pick up again then. And finally, to mention the jobs retention bonus. This was whereby employees were to receive £1,000 for any employee that they had furloughed during the period to the end of October, and still employed them at the end of January. So a bit of an incentive there to retain staff. This now won't be paid. The government have said that they will redeploy a retention incentive at the appropriate time. I'm not really sure what that means. It may mean that there's £1,000 bonus sometime next spring, but we'll just have to wait and see for further guidance on that. So moving on to some recent Charity Commission guidance. Here's a bit of a heads up on some of the things that the Charity Commission have provided guidance on over recent months. You could refer to their website for matters such as safeguarding and insolvency help that I've mentioned there. I've already mentioned, of course, CJRS, and I'm going to come on to look at some of the other financial support a bit later on. So I just really wanted to cover meetings on this slide. So regarding AGMs and any other members' meetings, these can now be held online until the 30th of December. That's been dealt with by statute. Prior to the statute being put in place, it may have required the change to governing documents, etc. But those meetings can now be held online with no need to make any other changes to your ruling documents. For other meetings, however, for example, trustees meetings, you still need to refer to the governing document to see what is permitted. And in many cases, there's not going to be any provision for online meetings, which is especially the case, of course, where a charity has been in existence for a number of years and probably precedes the internet in many cases. So in these, where this is the case, you may need to amend the governing document to allow for online meetings to be held, or take the decision to deal with things online and ensure that that's properly documented and discussed and approved at a meeting. So the key here is just recording that decision-making process, which you'll hear me mention a few times as we go through some of the points we're covering today. AGMs where they can't be held online or where it's not possible for you to meet face-to-face can be deferred. The Charity Commission may be sympathetic to allowing an extension to the filing deadline for your accounts, but for incorporated charities where you also have the Companies House deadline, that has been automatically extended for all companies by 3 months. The Charity Commission have not taken the same approach. As I say, they are being sympathetic to allowing an extension, but you do need to apply for that if it's going to be needed. So again, on charity reporting, just wanted to mention a couple of the items of guidance given by the Charity Commission. Here's a list of things that they are suggesting that the trustees' annual report should be covering. A lot of this is around, as you'd expect, explaining the impact of that COVID has had to give the user of the accounts a clear picture of what has happened. You may want to highlight uncertainties over future funding or income from activities where those activities are restricted and the income has dried up. For example, where charities have shops, these will have been closed for a number of months, so the impact of that should be explained. Any restrictions on your activities may also impact on the ability of volunteers to provide their services. So whether this ability has been reduced or the volunteers have been able to do other things to help you out, I think that's worth explaining in the annual report. Also, have you had to adapt operationally to the situation, or has your risk profile changed? And you may have decided to reduce reserves or use them in other areas. And you may even now be thinking completely differently about how things operate going forward in the longer term. All of these things can be touched upon. I think it needs to be a balanced report. So for many, that will mean making sure you include some positive stories as well as explaining the bad things that have happened in the past year. And for others, it may need an element of reality where they perhaps are in denial over how things have gone and are still trying to say everything's rosy. As always, the annual report it's an opportunity to give a narrative context to the charity's financial performance for the year. So depending on your year end, the impact of COVID may be more reflected in your next set of accounts rather than in the last one. So that may be something to be thinking about for going into next year. So looking at gift aid relief, there's been some changes to the rules here to try and generally just to try and make things a little easier for people to deal with in the current situation. A number of charities will have had events organised when we went into lockdown and have sold tickets for those events. Where an event has been cancelled and the purchaser chose to donate their ticket costs rather than take a refund, gift aid can be claimed on that as a donation, as long as the individual knows that the donation was not obligatory and that an audit trail has been kept of that matter. This would also apply where membership subscriptions have been refunded and individuals have chosen not to take that refund. Again, gift aid can be claimed on those. The Retail Charities Gift Aid Scheme, this is where individuals donate goods, often to a charity shop, and gift aid can be claimed on the sale proceeds. The normal situation here is that a signed written declaration is given by the individual to say that they agree for gift aid to be claimed, that they've paid sufficient level of income tax to allow the gift aid to be reclaimed. This can now be dealt with by an oral declaration, so there's no need for that record keeping on these, provided once again that the staff shop have explained the scheme to the donor and made them clear of what's happening there. And the other point here is the small donation scheme. So under the small donation scheme, a gift aid declaration is not required for donations of up to £30. Where individual donations of less than £30 have been maybe saved up and donated as a lump sum. So, for example, somebody who generally puts £10 in the plate every week at church, churches may have been closed and they haven't been able to go along, but they may save up their weekly £10 and pay them over as a lump sum of, say, £100. They can still be treated as individual donations that are below £30. So you can get the 25% relief without the need for a gift aid declaration. A quick word on the Charity Commission website. The online register for charities here has changed. So it now gives more information about the charity in a more accessible format. The homepage, if you like, for each charity has some of the information shown here on the slide. It's always been publicly available information, but in the past it's publicly available because it's included within your accounts or your annual return. So it doesn't jump out at the anybody looking on the Charity Commission website. So it's worth a review of the information shown on that page to make sure that you're happy that that is correct. Some of it, such as the staff earning over 60,000 and payments to trustees, can be considered quite sensitive information. So you want to be sure that what's showing there is as it should be. So moving on to the second part of today's session, I'm going to take a look at some of the features of the new daily lives of our charities and some thoughts on how we deal with those. So as a bit of background, I guess charities are often more agile in terms of their response to crises and significant events than government, because they're closer to the issues and less bureaucratic generally. So as a result of this, charities can often be the first line of response to such situations. COVID will have had a direct impact on the needs of many of those who our charities serve, and many charities have changed the services they provide in response to current needs, or have diverted funds to support different areas. So it's important to be sure that your housekeeping's all in order for dealing with this. If there are any new services or activities that you're providing, it's worth a revisit of your charitable objects to ensure that what you're doing now is still within the scope of those objects. Sometimes they may be quite narrowly defined, and in that case, they may need a revision to ensure that what you're now doing falls within those objects. It may also be, sorry, I just realized I hadn't changed the slide. It may also be a good time to consider a skills audit to assess whether you have the existing skills within the trustee and the management team to deal with any new activities that you may be offering. So a skills audit could identify any gaps and training or development needs that you may want to undertake. And also any new ways of doing things, any new activities may have an impact on your risk profile. So does it change your funding position? Or do any changes to your funding position or your activities have an impact on the risks of the charity? So moving on to funding, I think we all have a close view at the moment of cash flow and general funding needs. And there's been a major impact, of course, on those who usually have significant impact from fundraising income, from fundraising events, many of which are now not happening, on those who provide services directly to the public, and on those operating in retail, hospitality and leisure, where they've been closed for significant periods. And the impact of this has been some serious financial holes in many cases. And while there's, and in fairness, really, that there's been a quick response in a number of areas. I think matters that were directly related to charities were a little slow in coming through, but some more general support that all organisations can benefit from were put in place quite quickly. So we've covered, of course, the CJRS and the JSS. We also have the CBILS, the Coronavirus Business Interruption Loan Scheme. This was due to end at the end of November. It's now been extended to the end of January. So applications can be made for borrowing there up to the end of January. These loans tend to be larger loans. I'll talk about the bounce back loan in a moment, but CBILS is generally loans over £50,000. And the basic terms are that there's no interest or fees to pay for the first 12 months. Plenty of other criteria for applications, but I'm not going to cover that now. What I would say is that you need to demonstrate that you are a viable organisation that has been adversely affected by the pandemic, which for many shouldn't be too difficult at the moment. There's also the need to demonstrate that you were not an undertaking in difficulty as at the 31st of December 2019. There's lots of criteria around what this actually means, but for small and medium-sized organisations, it pretty much just means that you've not been subject to any insolvency measures or proceedings. The bounce back loans, the deadline for those applications has also been extended to the 31st of January next year. The maximum amount you can borrow here is £50,000. There's a much simpler application process, so it may be an alternative if your needs aren't any greater than that. And I think it's also worth saying that there's a number of organisations that we've dealt with where they didn't necessarily think from their assessment of their cash flow that they were going to need these funds, but with there being no interest and fees for the first year, having those funds available to them as a contingency, it may not be a bad idea to consider. Just a word about any funding that relates to specific projects. often that funding is dependent on meeting certain milestones or objectives by certain deadlines. It may be worth checking the paperwork in such circumstances to see if this is the case, and where necessary, reaching out to the funder to see if the deadline can be flexible. Often the failure to be able to meet such deadlines will be completely out of the control of the individual project holder. So that's worth a conversation, I think. And it may also be the case that due to the changing needs of beneficiaries and the restrictions on activities that can be undertaken at the moment, any restricted funding may not be able to be used for the purpose for which it was given. Again, it may be worth a conversation with the funder to see whether any alternative use of those funds could be made. And a word on grant funding. There's a lot of activity here with both government and large foundations and trusts making funding available. It's worth keeping an eye out to see if there's anything that you can benefit from locally. A lot of these schemes seem to have been done on a almost first come, first served basis. So becoming aware of those things and the need to act quite quickly, I think, is quite key. So just looking at the loans again, I think obviously grant funding would be the preferred option because loans have to be paid back at some point. And a couple of notes of caution on those loans. You may, for example, have restrictions on borrowing in your governing documents. So that needs a check. It could be an absolute restriction on borrowing, or it could be a restriction on certain types of borrowing, or where the term of the loan is over a certain period. So that needs to be referred to. You also need to ensure that you're able to repay the loans. So cash flow forecasting is really important here. And you also need to be sure that any borrowing being taken is on the best value terms. Obviously, it's the duty of trustees and senior management to ensure that they're getting the best deal for the charity in that situation. And all of these decisions and considerations should be minuted to again demonstrate good governance. It's also worth commenting for any unincorporated charities that quite often where borrowing is taken, there may be personal liability on the trustees. So some of those unincorporated charities may be worth them considering incorporating at this point in time. So I think it goes without saying that robust financial management is key and cash is key. We'd be encouraging all organisations to be producing regular management information with an income and expenditure account, a balance sheet, and certainly also, which isn't maybe normally part of the month-to-month management information, a cash flow report and cash flow forecasting. You could have a very healthy balance sheet, but if your assets are tied up as fixed assets and can't easily be liquidized, or they're tied up in debtors and those debtors are actually struggling to pay you, then cash could quickly become a problem, especially if there's debts that you need to settle soon, including, of course, the monthly payroll where applicable. It's also important to track restricted and unrestricted funds and the cash balances relating to those, because if unrestricted cash runs low, you shouldn't be dipping into restricted cash to cover for it, but that may well inadvertently happen. So ideally, cash flow monitoring should be done on a fund-by-fund basis. It's also quite useful to run different scenarios with your forecasting to see how you'd manage, for example, at only 80% of expected income, or if an expected source of income failed to materialize, or if there's any unexpected surprises on the expenditure side. This gives a bit more agility in terms of your ability to react to situations, and also demonstrates really good and strong governance by management and trustees. Trading subsidiaries are often the home for the commercial activity of a charity. The advantage of that being that that activity is then the risk of that activity is ring fenced from the charity itself. It can be an issue if the subsidiary is operating at a loss. They need to think about how they're going to be able to support themselves through that situation. And with many retail outlets and cafes being run as trading subsidiaries, there's certainly going to be a significant impact on those from COVID. Firstly, those subsidiaries should be checking that they've claimed all financial support available to them, whether that's retail grants or the furlough scheme or anything else that may be available locally. It is possible for the charity to provide financial assistance to the subsidiary. This is okay in the short term, but there really needs to be a clear plan of how the subsidiary is going to repay that loan, both in terms of their future cash flow and really an assessment of whether they are going to be viable going forwards and operating profitably in the future. And again, robust discussion and documentation of this at board meetings is very important. So obviously we're all working far more remotely and online at the moment. And as a result of that, there's been an increase in incidents of online fraud. As a result, there needs to be increased vigilance to protect your funds, your assets, and your reputation. So things like making sure that staff are alert to things such as unusual payment requests, where, for example, there's a request to change bank account details for a payment that may turn out to be a fraudulent invoice. And especially where finance staff are working remotely, they may not be so readily able to just check something out with their colleague who's sitting in the same room as them. So it really needs to be drummed home to them, if you like, that they're following the required procedures and checking in where perhaps they receive something that doesn't look quite right. If anyone's ever unsure, it certainly makes sense for them to be overcautious rather than undercautious. And in the example I've just given with the change of bank account details, a phone call to the supplier should be able to confirm whether that's correct or not. There've also been incidents of fraudulent requests for funding for those who are giving out grants. So again, a stringent due diligence process is needed to ensure that you're not the victim of an attempt to take funds from you under false pretenses. It's also very important that your IT systems are robust. The increase in cyber attacks over the course of the pandemic has affected many. Please be sure that you're as secure as you can be against breaches of your financial systems and also of your data, which could lead potentially to GDPR issues, which could have an impact on your reputation. So in summary, all these, I think we're all seeing a changed environment in which we're operating over the past few months. So there's going to be changes to the way we're doing things. I need to consider our ability to operate in different ways, whether that's within our governing documents, any resource requirements such as skill gaps that we need to address, and whether those changing working practices are robust and working as they should. So finally, I wanted to give a little advert for the MHA Trustee Hub. So the MHA Carpenter Box not-for-profit team, we work in collaboration with our equivalent sector teams at the other MHA firms around the country. And in previous years, we've produced a theme document focusing on particular areas for the year. This year, we've launched a new online resource aimed at trustees and charity staff. We've been gathering a library of template policy documents and checklists, as an example, a few of those on the screen there. We're also trying to keep it as live as we can with regular blog updates, etc. And the intention is that the resource will be added to as and when. I don't think anyone would say it's currently got everything on there absolutely everything we'd like to have on there, but it's developing over time. And as there's legislative changes or developments such as what we've been dealing with this year, then we'll be looking to reflect that and add further material. There's a link to the hub on the slide, and there's also a link to it on the MHA Carpenter Box website on our not-for-profit sector page. So please take a look at that, and I hope it's beneficial. And if you do have any suggestions for other material that you think would be useful, then please feed that back, and we'll look at adding it on.